I've been day trading for about 6 months now. So just wanted to make a brief video, provide some lessons learned and some tips. A couple of things just right off the bat. If you want to have longevity in this and you don't want to blow your accounts, there's two things you want to be aware of. It's over trading and your position sizing. And so trading too large of a position will drain your account, and trading too much will drain your account. You're just not going to last. Also, journaling your trades is important, but over trading is an account killer. So you don't need to trade every day. There were times in the first 2 months where I would trade a couple of times a day, and it never worked out. Now, a part of that was I was just trying to get my legs under me and learn the markets and learn the asset class. But a lot of it is just the psychological and emotional component of it. If you put on a trade and you lose, you might have a tendency to think that, oh, okay, well, I'll trade again and maybe I can make the money back. This is sometimes called revenge trading. And typically it just doesn't work out. You get into a downward spiral. You're losing money and you're losing it from an emotional standpoint. Or you win your first trade and it's like, yeah, I'm on a run. You're feeling all overconfident. So you put on a second trade and then you just give it all back. And so now you're break even. And it's just, to me, it's not worth it. That is what I have learned. I've been doing pretty good the past 2 months, and it's because I trade once a day. Like there's never going to be a second trade. Do you understand? It's like a fail safe that I have hardwired into my trading plan. And part of that comes with just being mature. Like I'm a 40-year-old man with a family, so I'm not playing games. I'm not a 20-year-old trying to buy a Lambo. It'd be cool to travel, to have some land and a nice house one day, but that's pretty much the extent of my worldly ambition. Like I'm not trying to earn tens of millions of dollars right now. You know, I'm just trying to supplement my income. Another important thing that I previously mentioned was just the importance of keeping a journal. That is a non-negotiable. Screenshot every trade, write why you entered and exited, the time, tag any mistakes, whether it's FOMO or stop loss was in the wrong place, whatever it is. And also be sure to document your emotional state. Like, why did you enter the trade? What were you expecting? How did you feel? Like, those things are important just because of the how fundamental it all is. Now, you're going to read it in most trading books, and most successful traders are going to tell you the same thing, that psychology is key, and they are going to tell you this because it is true. If it were the case that the smartest people with the highest IQs, with the most knowledge about finance and the economy and international markets, like if all that mattered, then the people who made 1600s on their SAT and who have finance degrees, summa cum laude from Wharton and Harvard, those would be the best day traders in the world. And we'd all be looking up to them, but it's just simply not the case. There are 18-year-olds, there are 22-year-olds who are absolutely crushing it. High school dropouts who are crushing it. And the reason why is they figured out their psychology, and that's all it is. Like, you have to understand that. Personally, I earned a finance degree from a very good business school back in 2009. I had the thought I was going to be some Wall Street guy or something. And it never panned out. I actually went into the military shortly after that because obviously the 2008 financial crisis, there just wasn't a lot of jobs in finance back then. But like it doesn't even matter. Like I've had some success the past couple of months trading, but I don't attribute that to my finance education. It's stupid. Like it's preposterous that some undergraduate courses I took back in 2009 are helping me. Like that's not the case at all. Like I've matured to the point where I have some control over my emotional and psychological state. For instance, if I put on a trade and it's a losing trade, I just close my laptop. You understand? Like there is no me continuing to stare at the charts and putting on additional trades. Like that's just it's never going to happen. Like I have fail safes built in. Something else that tripped me up in the early part of my journey was FOMO. So for the first couple of months, like most people, I lost money. Like I just couldn't put on winning trades. And the primary reason for it, and I at least recognized this because I was journaling, so was FOMO. So whenever the market would rip up or rip down, I would chase the candle. And so I would think, oh, okay, market's going up. Awesome. I'm in a buy. And then it would immediately correct in the opposite direction. Or if it was selling off, I would short the market and it's like, oh, good. The market's bearish. Awesome. And then again, it would rip to the upside. And so it's just really, really stupid. You have to be in a position before the major move. A couple of other things that are worth mentioning are prop firms and paper trading are not ideal. I tried them. I think you should try them. And I hope you'll quickly realize that they're just not ideal. Like prop firms are basically a scam. Not basically a scam, they are a scam. Are there some people who get payouts from prop firms? Sure, but they're not financial companies. They're not brokerages. Do you understand that? That's why they are allowed to operate in the United States without being regulated by the SEC. They are technology companies. Now, on their websites, they have a bunch of trading and brokerage jargon in order to attract people and bring people in. But the challenge fees that people pay, like that is the pot of money that's being distributed to the quote unquote winning traders. Like it's a simulation. Do you understand? They're not brokerages. Because if they were brokerages, they would have to be regulated in order to operate. These prop firms are being run from South Florida or from the Caribbean, like shady apartments and office buildings in the suburbs. Like these aren't real companies. Like they're just ways to make money for scammers to make money. Now, I mean, sure, you could get a feel for the charts, and so that's cool. I used them for about a month, and then I saw through it. I said, yeah, this is stupid. Like, it's just not real. Like, if you're serious about day trading, then day trade. Take a pot of money that you could afford to lose and put it in an actual brokerage account. Charles Schwab. I use interactive brokers. You could use Fidelity or TD Ameritrade or whatever. Just something that's regulated. Something that's been around for 50 years or a century. Use those companies. Use real money. And on the paper trading front, I paper traded for about 3 weeks and then I'm like, nah, like this is all right because you get a feel for the charts and how the web interfaces work and how the mobile apps work. But it's not ideal because the psychological and the emotional component are removed from the equation. And you can't have that. Those are the two most important things, the psychology and the emotional aspect. It's the same reason why backtesting is not ideal either. Because while backtesting is actual data, so you could see how a setup plays out and you could see where your entry points might be, but because of psychology and emotion are removed from it, it's not what you want to be doing. Like get in there with real money in a real brokerage and trade. That is how you get better.